Good morning. The team of Columbia Threadneedle Investments is here to present a portfolio update on Balanced Commercial Property Trust for the quarter ended the 31st of March 2024. It's myself, Christine Cantrell, the Head of Investment Trust Sales, Scott McRae, the Company Secretary, who will be able to firstly talk through the figures released in the Q1 NAV, and then we'll pass over to Richard Kirby, the Portfolio Manager. On the 15th of April, the board of BCPT announced a strategic review to consider the future of the company. The strategic review is exploring all strategic options available, including a possible sale of the company. As such, BCPT and we as the manager are subject to certain restrictions under the Takeover Code. So as such, then we will not be discussing matters relating to the strategic review in our update today, nor will we be including any forward-looking statements or forecasts. So we can give as much update as possible on the portfolio. Shareholders then wishing to provide any feedback to the board of BCPT in connection with the strategic review may do so directly by emailing chairmanbcpt@georgeson.com. With that, I'll hand over to Scott.
Thanks, Christine. The unaudited net asset value at the 31st March 2024 was 107.3 pence per share. This represents a decrease of 2.3% over the quarter, and an NAV total return after dividends of minus 1.1%. From a share price perspective, the share price at the end of March was 81.4 pence per share, which represented a discount of 24.1%. This is significantly narrowed from the 34% at the previous quarter end, and therefore the share price total return over the quarter was 14.3%. Of significant note over the quarter was the sale of 2 office buildings for a combined total of £54.6 million. Therefore, at the end of the quarter, the company had £66.1 million of available cash, and they had also paid down the £30 million revolving credit facility during the quarter to use some of the share proceeds. The company paid 3 monthly dividends of 0.44 pence per share during the quarter. You will note that the dividend was uncovered during the quarter at 62.8%. The main reason for this was an accounting adjustment. Under IFRS, the company has to smooth rental income, and therefore the 2 properties that had been sold had debtors on the balance sheet, which had to be written off as a one-off to the profit and loss account this quarter. With that, I'll hand over to Richard.
Thanks, Scott. As Christine has already outlined, the announcement of the strategic review restricts what I can say to information which is already publicly available. So with that in mind, I intend to provide brief updates on, first, the market backdrop to BCPT's latest NAV, the portfolio valuation, investment activity, and then provide an update on asset management. To start, I will provide a few comments on the market. Investment activity in Q1 remained constrained, with volumes being substantively down. This was experienced across all subsectors and the central London markets. The outlook for interest rates and the timing of future cuts, which now look like being pushed back later into the year, is providing uncertainty, which is impacting both the dynamics and the decision-making in the capital markets. This was reflected in the MSCI UK Quarterly Index, which recorded capital growth of minus 0.7%. At sector level, returns remain nuanced, and this quarter was really a repeat of other quarters where industrial, logistics, and retail warehousing, which are all supported by strong occupational demand, performed well. Offices remained very challenged in a highly illiquid market. Moving to the portfolio valuation, BCPT's portfolio recorded a valuation fall of 1.6% over the quarter, with the portfolio's equivalent yield moving out 20 basis points to 6.7%. Given my comments on offices, it is unsurprising offices were the worst performing sector. BCPT's offices were marked down in value by 4.3%. This was driven by the equivalent yield moving out 92 basis points to 9.1%. The industrial and logistics segment experienced a small capital value decline of minus 0.2%, with the valuers adjusting some of the tighter initial yields. But overall, the equivalent yield remained broadly stable at 6.1%. Positively, retail warehouses saw capital values increasing by 2.4%. This was due to yield compression on the back of improving investor demand for prime stock, which I mentioned earlier. BCPT's retail warehouse parks in Newbury and Solihull meet the quality demanded of prime and remain fully leased on a robust grocery, discount and convenience-less tenant roster. The equivalent yield on the company's retail warehouses improved 12 basis points to 6.1%. I need to cover St Christopher's Place estate, where the value fell by 3.3%. This fall was largely attributable to Body Shop entering into administration and ceasing to trade from their store on Oxford Street, which forms part of the frontage of the estate. Now, anecdotally, Oxford Street is in a recovery phase and there is leasing activity along the street. Now, the former Body Shop unit is very prominent corner property and it hasn't been available to let for over 30 years. We have instructed leasing agents to market the unit, and we are now in receipt of several offers which are being scrutinised and negotiated. Turning to investment activity, we have in previous updates flagged office sales, and we continue to execute the board-endorsed strategy to reduce the portfolio's office exposure. During the quarter, we completed the sale of 2 office assets. The first was 2-4 King Street, London, a small multi-let freehold property located in St James's. The second, a corporate headquarters office located in an out-of-town location in Crawley. This building, known as Leonardo Crawley, was the portfolio's largest office asset by value. These sales completed at an aggregate price of 54.6 million, which reflects the discount to the preceding valuation of 0.4%. I believe the completion of these sales at that price was a great result for the company. We are continuing with the strategy to sell offices, and we have an active pipeline of further sales to reduce exposure. Finally, I would like to make some observations about our asset management activity. I would like to assure shareholders the team remain highly focused and motivated to deliver the numerous opportunities within the portfolio and to create value. Over quarter one, we have completed 18 leases and tenancy agreements. I would like to pick out a few of the notable outcomes. At St Christopher's Place, we are progressing our strategy to reposition the estate by increasing the food and beverage offer. To that end, Sunday in Brooklyn have leased a newly created unit, which is important as it has a double frontage. Sunday in Brooklyn have signed a 15-year lease in line with the ERV, with potential for top-up based on turnover achieved. The recent F&B lettings have increased St Christopher's Place exposure to the sector to 42% by capital value. At the Cowdrey Centre, which is an industrial centre in Colchester, we completed a major refurbishment of a unit and let it to MKM Building Supplies on a new 20-year lease. MKM are a good addition to the estate and supports our strategy to increase the number of trade uses in this location. And then to evidence there is still leasing activity in the central London office markets, at 17A Curzon Street in Mayfair, the refurbished top floor was let at a rent of £130 per square foot. This is the highest we have achieved in this building. And then over in the City of London, we have let the last remaining floor following the building's refurbishment. This letting achieved a rent of £64.50 a square foot, which was ahead of the pro forma ERV. And that concludes the Investment Manager's update for quarter one. Thank you for your time listening to and watching the update.
Great, really appreciate that, Richard. And just to notify shareholders again that there is an AGM on the 20th of June at 12:30 p.m. So it also gives you an opportunity to come and give feedback and ask questions. Thank you very much and enjoy the rest of your day.